So here I'm looking at AUDJPY, which is the Australian dollar versus the Japanese yen, right? So what I want to do right now is to show you how I caught this trade right here, right? So what I want to do right now is to clear all drawings and start analyzing from scratch, just to show you how we go about analyzing the market, right? So here I'm looking at the 4 hours time frame. But as I always say, you can never start analyzing from the lower time frame without understanding the bigger picture of the market, right? So what I have to do right now is to go onto the weekly time frame, and when I get onto this weekly time frame, what I want to do is to find my highest level of the market and my lowest low of the market, right? Which in this case, my lowest low of the market is going to be that point over there, right? Which is my demand level and which is also my support level, right? Sorry about that. And now I have to find my highest high of the market, which in this case is going to be that level right there. And I am choosing that level as my highest high because of how the market turned from these levels right here. How the market turned from these levels right here to move to the downside. The market turned here because it first presented us with a reversal structure, right? So even if the market have not presented us with this reversal structure, we would have used our highest high that we could have found on our left side of the market, right? So we would have used this area right here as our highest high of the market. Now pay attention to what happened when the market approached that area. The market approached that level right there in a form of a reversal structure. So there is no point for us to use that area. We will just use this area right here as our highest high of the market. Reason being that the market approached that area in a form of a structure, that structure being the 1 2 3 formation, that 1 2 3 formation being the ascending structure, which is the first touch, second touch, right? So what I want to do right now is to show you how you spot the first touch and the second touch and the third touch, right? So during these areas right here, to spot your second touch, you have to know automatically that your second touch must be higher than the previous turning point, right? As soon as the market moves away from this second touch, you know automatically that the market is moving away from this level to come and give us a second touch of the lower trend line, right? So we will now have 1 2, right? As soon as the market reaches this level, we must know automatically that the second touch of the lower trend line must be higher than the previous turning point, right? And as soon as the market is leaving this point right here, we know automatically that the market is leaving this area to go and give us that third touch of the market, right? Which is going to be that level right there. And that third touch will be the highest probability to enter the market to move down with it, right? So now that we have our structure right there, and that structure has already been broken by the market, and the market seems to be pushing all the way to the downside. So now we have identified our highest high of the market and our lowest low of the market. We have identified the playground of the market. So this is where the market is playing at, right? So we know automatically that the market is moving from the upside to the downside. because previously the market moved away from support to resistance, and from resistance we are moving back to support, right? So what I want to do right now is to move on to the lower time frame, the lower time frame being the lower time frame than the weekly time frame, which is going to be the daily in this case. So when I get onto this daily time frame, what I want to focus much more on is what happened after the breakout of this overall structure right here. The market broke out of that structure and then presented us with that movement right there. So this was just a psychological side of the market, right? The market was playing psychology right here, but we know automatically that when the market breaks out of the structure, the market must come back and complete the 90% rule of the structure, which is exactly what the market did right there. So now moving forward, as I always say, whenever you see the market pushing impulsively, or whenever you see there's a strong move in the market will give us some sort of a structure. That structure being the 1 2 3 formation, that 1 2 3 formation being the ascending structure right there, and then we also have that 1 2 3 formation on the lower level of the market, right? And what we want to focus much more on is how we could have entered this market and moved down with it, right? So what we want to do right now is to move on to the lower time frame, which is the lower than the daily, which in this case is going to be the 4 hours time frame, right? So here on the 4 hours time frame, what we want to look for is those entry opportunities that we could have got onto the on this 4 hours time frame. So as you can see, the market presented us with that 1 2 3 formation structure, that third touch being our highest probability to enter the market. But pay attention to how the market moved to the downside after that third touch of this market structure right here. The market moved down in a form of a correction, right? So the market gave us those higher lows and higher I'm sorry about that. The market presented us with those lower lows and lower highs, right? That was a structure that was representing that the market might move back to the upside, right? So we had that 1 2 3 formation right there. The market presented us with that 1 2 3 formation right there. After that 1 2 3 formation, we see the market breaking out of that structure to complete the 90% of that structure, which is that level right there, right? After the market completed that 90% of that structure, the market presented us with a double top formation, that double top formation being this level right here. So a double top formation in the market represents a reversal in the market, right? So pay attention to what happened after that double top formation. The market moved impulsively to the downside. So again, after every strong move in the market will present us with some sort of a structure, right? And that structure being the 1 2 3 formation right there. 1 2 3 formation on the lower level of the market, which is not picture perfect. So what we want to do is to focus much more on how we could have scaled in on this trade, right? So what we want to do is to go onto the 1 hour time frame, which is the time frame that we use to execute the market and to also analyze the market, right? So we use the 1 hour time frame to enter the market, or to just analyze much more deeper into the market, right? So right here on the 1 hour time frame, within that same structure right there, we can see now that we have been presented with that 1 2 3 formation, that third touch being the highest probability to enter the market, to move down with the market, right? So we can see that there is a continuation pattern right there, which is our 1 2 3 formation. So we could have just entered the market from these levels right here, and then our stop loss just above that level right there, right? And we know automatically that the market has to move all the way to the downside based on the structure that we have on the 4 hours time frame. So when we look into this 4 hours time frame, we know now that the market had to just play all the way to the downside until we complete the 90% of that structure which we have on our left side, which is this level right here. The 90% of this structure is this level right here. So we could have just made about 5% profit on this trade. Moving forward, again, whenever you see a strong move in the market, after that strong movement in the market again presented us with that structure, which is the higher highs and the higher lows, right? So that is an ascending structure. An ascending structure in the market represents a continuation pattern to the downside, right? So again, what we want to focus much more on is how we could have approached this structure right here. So we are just gonna go back onto the daily time frame just to analyze what is happening currently on this market structure right here, right? So we can see that the market presented us with that 1 2 3 formation, which is being the first touch, second touch is right there, and then our third touch right there, right? And then again on our lower level of the market, we have our first touch and then our second touch right there, and the market is just moving lower to the lower levels of the market to break out of this structure and then to complete that 90% rule of that structure right there, right? But what we want to focus much more on is how we could have approached this structure and how I actually approached this structure, right? We can see now that the third touch is always our highest probability to enter the market, the third touch being these areas right here, right? Now let's look at this candlestick pattern right here. This candlestick pattern right here is called a pin bar, right? So this candlestick pattern represents a reversal in the market, and let's pay attention to how this candlestick closed. This candlestick closed below that trend line, right? That candlestick closed below that trend line. So right here on these levels, we have multiple confirmations. We have an ascending structure, that ascending structure followed by that candlestick pattern, and that candlestick pattern has been confirmed because there was a candlestick pattern that came after that candlestick pattern, which is an engulfing pattern, right? So again, we want to use I also use trend line guideline, right? A trend guideline, right? Pay attention to what I'm doing right now. We have that trend right there, and again, this is not a structural trend line. I use this trend line as a guideline, right? You cannot be taught this. No one can teach you this trend line. You just have to use your common sense, you know. Again, let's pay attention to how the market has been respecting this trend right here. This is to confirm that the market is respecting this guideline, right? Look at how the market closed right here. Again, this is just a multiple confirmation to confirm that the market is pushing all the way to the downside, right? So we can now see that the market is respecting that guideline right there. So what we want to do right now is to pay attention to how I entered the market around these areas right here, right? So what I want to do is to go onto our 1 hour time frame. Our 1 hour time frame being the time frame that we use for entries. So when I get onto this 1 hour time frame, we can see that the market presented us with that head and shoulders pattern, right there. We have our head and shoulders pattern. We have our head right there. So this head and shoulders is part of that candlestick rejection that we saw on the daily time frame, right? And whenever you see a head and shoulders pattern in the market, a head and shoulders pattern in the market represent a reversal in the market, right? So what happens is that what happened on the left side of this structure must be repeated on the right side of this structure right here, right? So we can now see that the market has already retested that neckline of this head and shoulders pattern. Now we are just moving lower with the market, right? So our entry point was, my entry point was just above this level right here. My stop loss just being above that head and shoulders right there, and now I am just moving lower with the market. And when I go on to my 4 hours time frame, I know automatically that the market should just come to the 90% of this structure right there. So that is what I am looking forward